Hey everyone, welcome back to yet another episode of Squawk. It's been a long time since we do this, and this is starting a new year, fiscal year of 2023. So I just want to give you guys this brand new episode to show you guys what my outlook is for this year in equity market in the United States. As a disclaimer, I want to say that this is purely information only, and it does not serve as a financial advice or stock recommendation. So it's up to all of you guys to decide whether you want to act on this information or not. So with that being said, let's turn our attention to the chart. Right in front of me, I have the S&P 500. Let's zoom out just a little bit. This top here, we're looking at December of 2021. So me included, not all of us realize that, hey, the Christmas before last is actually the high of the market. Now, with that being said, let's use that as reference point for 79 or for 80. Let's take the whole number. That's going to be the resistance. So this year's goal is to breach that. And I say this with full conviction. I think this year we're going to try to hit 480, and we're probably going to hit there before summer comes. That's going to be a reference point overall for this market, and you got a good amount of profit margin to catch. And here we have a pivot level about 350, 340. Let's draw a horizontal line, and that's the range. That's the range it has been trading. It seems like the momentum going downhill is slowed down a little bit. Now we're going sideways. Let's draw some trend line. That's my trend line, and then that's my trend line. Here we have, so this is what we call a higher low, and you can also call this a reverse shoulder head shoulder pattern. Something that we've done on trading floor. Me personally, I don't look too much into it, but I know there are other guys looking into this. So let's quickly mark this, and that's going to be your trade towards the upside. We're looking at from $400 to perhaps $460 or potentially $480. So that's about $80 per share on this ETF trust tracking S&P 500. That's the thesis for Q1 and Q2. We're going to get there. It's just a matter of time. Now, if you zoom out a little bit, you can even take a look at weekly chart. Weekly chart, if you look at what's happening in the past 2 years till before COVID happens, we are still kind of in an uptrend, right? I wouldn't call this a crisis or depression. This is merely a correction. It's probably a slightly bigger correction led by tech sector, but I would not call this a depression. So if you are one of the guys feel like the world is ending, I'm here to tell you it's not. And it will come back up from here, and overall it will get stronger with the revenge traveling happening as new blood entering into the economy. And I think we're going to be looking at a 10-20% gain from here. So that's the market. Now let's break into different sectors. Here I have right in front of me the power shares. The power shares from Invesco, it's traded on NASDAQ and it's tracking the big guys, right? When I say big guys, I meant the large cap stocks. So we're talking about Apple, Facebook, Microsoft, Amazon, that sort of companies. So as a leading portfolio in the tech sector, of course, this thing is coming down. And it's a lot, right? We're looking at $400 on the top. Let's put a horizontal line, and boom, we are looking at the bottom of 260. That's not a small drop, right? That's a big drop. And it's worth noticing that this is what I would consider a rather bigger correction. Let's put up the trend line. Obviously, right now, it's trying to break that. I think there's going to be an uptrend from here. I do not know where this is going to go yet. I just know that the probability goes up from here. It's much larger than probability that goes down. It's worth our attention. Let's put all these names on the radar. And then another name that's been gaining some attention is oil, right? Obviously, oil price is going up. So I just want to throw this name out there. I think this can be interesting. I know some people are trading it. We are looking at an uptrend from 2020 all the way to perhaps the May or the April of 2022, and then that's it. It pretty much has been coming down from here. Although the gas price is not being reflected, right? It's pretty high, so just something to watch out. I don't really have a thesis for this name. I don't trade oil myself, but it is worth noticing. In addition to that, of course, we can't really miss out on gold. Gold is very interesting right now because it has this double top, right? Let's put a horizontal line. In this case, we're looking at an area. So $2,000, you can round that as a whole number. That's pretty much the trade, right? Eventually it will break. I don't know when it's going to break. I think we're trying to test that right now. There's going to be a trigger here trying to test at 2,000 for a third time, and it's likely going to break. Once it's break, I think we're going to be looking at a rather larger increase from here, potentially to 2,300. And if you are a gold trader, then this name is definitely for you. And then also when it comes to gold, it's interesting to compare with S&P 500. And you look at the two chart, S&P 500 has not been going up as high and recoup that much of a profit as gold. So it definitely shows some relative strength, right? If you're a commodity trader, forex trader, definitely put his name on your watch list. The probability that this thing is going up is much higher than this thing turned back down. And then, speaking of gold, at today's level, we also have our digital gold, right? Which is Bitcoin. Now, of course, Bitcoin has come down a lot. The bubble has burst. The hedge fund guy is getting caught, right? And while he was getting caught, he actually went to Bahamas. Dude, not a good call, right? When your company is on the verge of bankrupt, you don't take the money and go to Bahamas. That's just a lesson number one for hedge fund managers out there. So let's take a look at the chart. Boom, we've come a long way for this name, right? Lots of volatility from 2017. We're talking about essentially a high of 20,000. It shoot up all the way to 20,000, poke into it, and immediately bounce back down, and then stay around 4,000, and then wiggle around, and then eventually it broke here, and finally it comes with another bull market. So why am I showing you guys this in 2018, 2019, right? I'm showing this because the current chart follows similar pattern. Me personally, I have a long thesis in Bitcoin, so I tend to be bullish when it comes to Bitcoin. But on the other hand, don't let my bravery affect your decision, right? Let's take a look at the chart. So the top of the market for Bitcoin is in November 2021, and we're looking at 68,000. Yes, you can call that a bubble. I don't care what name you're going to call it. It's definitely overtraded, right? And chances are it's not going to be a true reflection of what the value is. And I say that with huge bravery because we all know Bitcoin is currency. Currency does not have intrinsic value, right? It's not like your chairs, your computers, your buildings have intrinsic value. Currencies do not. Currencies is a trading scheme, and you can swap with a different currency. That's it. A currency's value is whatever we say that it has. It's whatever humans put on it, right? So intrinsically, the value is zero. This name is only serve its purpose when you're trading it or when you use a hedge, right? For instance, when you have a large corporation that you have a lot of assets overseas, and whenever there's an economic shock and you want to protect your assets against the offshore currency risk, so that's going to be when holding foreign currency is helpful. Bitcoin is just not a currency. You can hold it, you cannot hold it. You pay or you earn that exchange rate difference. That's it. So with that being said, we're not looking at your conventional assets here, right? So all that fundamental knowledge goes out of the window. You're only looking at the tape, and the tape is the only thing that matters. So that's kind of our take on this name. And of course, we added a couple of bottoms here, and unfortunately it broke here, and all these positions that we added are out of money. The good thing is that we actually didn't get out. We continue to add here, and we continue to add here. And of course, we're doing this with careful means. We're not taking all our savings and dumping into this name. We're slowly adding it, build up our positions. We're going to see what we add. I think right now our cost is probably somewhere here. Let's put a horizontal line. That's probably going to be our cost. I don't want to say I traded this name perfectly because I didn't, but I did trade it in a way that I believe it's the best method to build up the position in the long run. And let's see if that worked out. It's bounced back up a little bit, so we have recouped a couple of that cost in the past 6 months. I would say that's pretty good. And this drop, let's put a vertical line, that happened in June of 2022. So right now we pretty much recouped all of that cost, and it's always a nice thing to have, right? And if you read the Wall Street Journal, you're going to notice that, oh, some people are now bullish again for this market, and then something's going to happen. I kind of disagree. If this thing is going to go back up, sure, good job. I'm going to be happy about it, right? Because I have a position in this name myself as well. But I don't think this is really a reflection of the current economic condition. I think this is more likely due to a short squeeze. Some company had a lot of short position on Bitcoin, and now they're getting squeezed out of their position. So this is a weekly chart. If you look at this week, we're talking about a 22,000 trading volume. Now, that is a good indication that there are some big guys in there that's making the market. So I just want to throw that on the table, share with you guys that information. This 22,000 Bitcoin is not going to be caused by random Joes like you and me, right? It's going to be caused by some hedge fund. And specifically this week as well as this week. And these are the good reference point. So let's put a vertical line, and that's going to be the window we're watching out for. I would say that if Bitcoin can hold around 24,000, then there's a higher chance to go back up to 40,000 and potentially 44,000. Focus on the US market, focus on the tech sector. we're going to be looking at another 10-20% gain, and hold on to your position. Don't get scared out. With that being said, if you like the episode, give a like and hit that subscribe button, and I'll see you guys in the next episode.